Hi, I'm Mark, and today I want to talk about scandals and broken promises again. This time, not really Brexit promises. And we begin with Boris Johnson. Public spending on defending ex-Prime Minister Boris Johnson in the Partygate scandal is on the rise. The costs for his team around star lawyer David Pannick are now around £245,000, as the BBC reported last night. Experts were surprised that Johnson was allowed to use tax money at all and spoke of an unprecedented case. The opposition is demanding that the Conservative politician pay back the expenses. Well, anyway, Johnson has made around £5.5 million on scripts and speeches since stepping down as Prime Minister in September 22. A parliamentary committee is to clarify whether Johnson lied to the House of Commons in the Partygate affair. In this case, he faces a suspension from Parliament, which could lead to the loss of his mandate. The then head of government had repeatedly emphasized in Parliament that he had no knowledge of illegal lockdown parties in Downing Street. Meanwhile, Johnson has admitted false information but denies intent. The committee questioned Johnson for hours in March. I've seen that, was quite interesting. And it's still unclear when the MPs will present their report. But Rishi Sunak is not faring better at the moment. His promises fail one after another. British Prime Minister Rishi Sunak is at risk of missing his target of halving inflation this year, as underlying inflation shows no sign of peaking, either in the UK or abroad. That was reported by the British think tank National Institute of Economic and Social Research in Asia, and they told this Reuters on Thursday. The inflation rate is not expected to drop below the target value of 2% again until early 2025. The Bank of England now expects this and is reacting. The key interest rate thus remains well above the level in the euro area. As expected, the Bank of England raised its key interest rates by 0.25 points to 4.5% on Thursday and outlines a slower decline in inflation in Great Britain in its new forecast. The inflation rate was 10.1% most recently and should soon fall significantly, at least as the central bank governor Andrew Bailey said. However, it will only fall below the target value of 2% at the beginning of 2025, instead of at the end of 2023 as previously forecast. Although energy prices are falling, price increases for food and other goods are proving persistent. At the same time, the central bank raised its economic forecast. The feared recession did not materialize. Economic growth will be significantly stronger over the forecast period than expected in February, writes the central bank, although growth will remain moderate. The economists expect growth of 0.25% this year and 0.75% in 2024. The pound rose minimally to €1.15 after the interest rate decision on Thursday. And Chancellor of the Exchequer Jeremy Hunt welcomed the good news that the Bank of England is no longer expecting a recession, but they still have the red lantern. The bad news for the government is that its goal of halving inflation this year will be just within reach, but they will not reach it. The interest rate hike was the 12th since the U-turn in interest rates began in London at the end of 2021. 7 members of the Bank of England's interest rate committee voted in favour and 2 members against. We need to stay on track to ensure inflation falls back to our target, said Fed Chairman Bailey. Financial market participants and economists expect further rate hikes this year, though. And Deutsche Bank's Sanjay Raja underscored the major upward revisions to growth and inflation forecasts, adding that the Monetary Policy Committee is no longer so confident of getting inflation back on target. And Henry Cook of the Japanese bank MUFG predicts another interest rate hike in June. There was no sign of a pause from the BOE. On the financial markets, it's expected that the key interest rate will rise to a high of 5% even. In its statement, the Bank of England addresses the discussion as to whether interest rate hikes by central banks are now having too strong a braking effect on the economy and increasing the risk of new crises. Risks remain, but barring another shock, tightening credit conditions linked to recent developments in the global banking sector are likely to have little impact on the GDP. That's at least the opinion of the BOE. Gross domestic product is expected to stagnate in the first half of this year. Economic activity was less weak than expected in February, and the committee now believes that demand developments are likely to be much stronger. The central bank says this, but despite the ongoing rate hikes, they are now more optimistic about the British economy than they were a few months ago. But that happens in other places as well. And this also applies to the British labour market. Although there are signs that the labour market is beginning to ease, it is likely to remain tighter in the near term than in the February report. The unemployment rate is now expected to remain below 4% through the end of 2024, before rising to around 4.5% in the second half of the forecast period. And the NHS health service continues to suffer from a lack of money and staff as well. In England, more people are waiting for a routine operation than ever before. At the end of March, 7.3 million people were on waiting lists, up from a month earlier, according to the NHS England Public Health Service. The NHS has been underfunded for years, with many professionals leaving the service because of low wages. The statistics go back to August 2007, and the largest part of Britain has about 56.5 million inhabitants. Prime Minister Rishi Sunak has promised more money to the NHS and said he would significantly reduce waiting times. The government was also unable to keep its promise with another project. The number of people waiting more than 18 months for an intervention fell significantly from almost 30,000 to a good 10,700. It was announced, however, that by April, no one should have to wait that long for surgery. And there's also still headwind for Sunak when it comes to the asylum law. The Anglican Archbishop of Canterbury, Justin Welby, has criticized the UK's government's plan to tackle cross-channel immigration in an unusually harsh manner. It is morally unacceptable and politically impractical to leave the poorest countries to deal with this crisis alone and to cut our international aid, said the spiritual leader of the Church of England on Wednesday in the British House of Lords, as the portal Politico reports. Obviously, we can't and we shouldn't take everyone with us, Welby said during one of his rare speeches in the House of Lords. But this bill makes absolutely no sense in the long term, said the Archbishop, who spoke at the coronation of King Charles III on Saturday and played a central role in there. And now he's talking on the law proposed by Prime Minister Rishi Sunak. This bill does not take a long-term and strategic perspective on the challenges of migration and undermines international cooperation, rather than giving the UK an opportunity to show leadership as we did in 1951, he said, citing the UN 1951 Refugee Convention. Welby, Lord Bishop of the House of Lords, pointed out in his speech that other bishops are likely to join his criticism of the bill later on. Sunak introduced the illegal migration bill in March, which aims to reduce the number of people using small boats to make the dangerous crossing from the French to the British coast. The bill will ban people arriving in the UK on such boats from applying for asylum and severely limit the ability to challenge UK asylum decisions. According to this, people who have immigrated illegally would have to be arrested and deported to a safe third country. Critics, including representatives of the European Union and the United Nations High Commissioner for Refugees, argue that the draft violates international law because it ignores the refugee obligation Britain has. The measures were passed by MPs in the House of Commons in April, but the House of Lords, as Britain's second legislative chamber, has the power to send heavily amended legislation back to Parliament for further consideration. They can't stop it, but they can delay it. But I want to say one thing. I talked a lot about this migration law and about the legality of it. But I have to say one more thing about the NHS, and I mentioned Boris Johnson in the beginning already, so it fits. The NHS is still totally underfunded. That's why all those problems are still there, because nobody wants to work there. Plus the problem that people from the EU have hard times if they want to work there, and they, after Brexit, more of them left than ever would come back. But I do have to mention the one thing, the red bus, when it comes to NHS and funding. I really remember a lot of Tories using this red bus in the Leave campaign with the fantasy £350 million a week. I gave you the right calculation in another video, that it was just 180 million a week and not 350, but still, that those 350 million a week were supposed to go to the NHS when they are not going to the EU anymore. So, where is this promise now? There is a Conservative government. They have a majority, a big majority, since the general election with all the Brexit promises in 2019. They could easily bring this funding through Parliament. But where is it? But talking about Brexit, that's an important point today. If you haven't watched Outside Views games ever and played a game there, today is your absolute chance to get started, because from this morning, the Brexit game is online on Outside Views game. And I suggest go there and test your Brexit knowledge. And I'll see you in my next video. I'll be back.